You see this chart right here? It's just like a book, and it is telling you a story. Today, I'm going to teach you how to read that story. What is up? Welcome back to my channel. If you're new here, my name is Sarah, and on this channel my goal is to help you to become the best version of yourself and achieve financial freedom. So I talk about cryptocurrency, entrepreneurship, personal growth, and so much more. If that sounds like something that you'll be interested in, then make sure to hit the subscribe button, turn on your notification bell to stay updated for my next video. Today I'm going to be teaching you how to read Candlesticks Charts. Now, Candlesticks Chart can seem very confusing when you're a beginner because there's just so many things that goes into it and it just doesn't make sense. But don't be afraid, because today I'm going to teach you exactly how to read it. So let's get right into it. Okay, let's get started here. I'm gonna go to tradingview.com. This is where you do technical analysis. Yeah, it's the place where you can look at the market of different currency. You can see the price action of different currency. It's a very useful site that you will be using once you start trading. And what you're looking at right now is a chart, candlestick. Now when you look at this candlesticks here, it is telling you a story. It's telling you a story, right? And you can be able to read that story. That's what I'm going to teach you today. I'm going to teach you how to read what these candles are telling you, because they're not just there for no reason, they're there for a reason. So I want to teach you exactly how to read it. Now as you're looking at this chart, you can see there's a blue candle and there's a red candle. Now a blue candle signifies that the price has gone up, and then the red candle signifies that the price has gone down. So now you're probably wondering, what determines that a candle will turn blue, and what determines that a candle is gonna be red? Okay, now the thing that determines it is the open and closing price. So each of these candles that you're looking at, they each opened at a certain time and then they closed at a certain time. And that is called time frame. So this candle chart that I'm looking at right now, this is on the monthly time frame, and to get to this, to choose time frame, if you go on TradingView at the top right here where I'm hovering, this is how you can switch into different time frame. So right now I'm looking at the chart for the monthly time frame. I can switch to the weekly time frame. So all this candle that you can see here is on the weekly time frame. Now that means, it doesn't mean that all this candle represent 1 week. It's actually one of the candle. Each of this candle represent 1 week. So this candle represents 1 week, this one represents 1 week, 1 week, and then if you look at the bottom here, it also shows you the date. At the bottom you can see here April 12, 2021. It's showing you the date of when that week started, right? Or yeah, when that week started. So this one, the week started on May 17, and then you know a week is 7 days. So I believe the cryptocurrency market goes from Monday to Sunday. So depending on what time zone you're in, it may be different. Some in other countries it may start on Monday because of the time zone, but in where I am in Canada, I know that the new weekly candle starts on Sunday at 6 p.m. So yeah, so when you're overing, you can see at the bottom it's telling you the date. So each of these candles represent 1 week. It can go all the way up to 1 second, guys. But in order to view the 1 second on TradingView, you need to have a paid account. You need to upgrade to a paid account. However, you don't need it. As a beginner, you're not even going to be using the 1 second. You'll be sticking to the 15 minutes. And this one you can use on the free TradingView account. So now that I went to the 15 minutes, this is showing me the chart, the price action for every 15 minutes. Every 15 minutes, what is happening, this is what is happening. So when I click on this chart here, this is what's happening in every 15 minutes. So you understand that there's time frame. Now, depending on what time frame you were in, the chart is going to be different. So if I look at the 4-hour time frame, it shows, let me zoom out, okay? When I look at the 4-hour time frame, it shows that the price, like it sort of shows that we're going up, like we're in a bull market. And a bull market means that the price is going up. Like if you keep seeing the price like creating higher highs and higher lows, it means that we're in a bull market. So if you can see here, it went up and then down a little, up again, down a little, up. So it's creating that upward momentum, and that is what we call a bull market. So on the 4-hour chart, when I look at it, we can see that it shows that it's in a bull market, right? That's the 4-hour. But when I go to the 1 day, let's see what is the 1 day is telling us, eh? See, 1 day is not showing that high of a momentum. The 1 day chart is not showing that high of a momentum, right? It's just showing like it's starting to go up, but it's not that high yet, right? And if I go to, let's say, 1 hour, so small, okay. So 1 hour, you can see like, wow, it is going up. Look at that. It has gone up. It's going up, down a little, up, down a little, up, up, and look at that. Holy, it's so high, eh? All right, let me get back to the training of candlesticks. So now, depending on what time frame that you're looking at the chart, the candles will be different. So now, like the previous question, what determines that a candle will be red and what determines that a candle is going to be blue? This is what determines it. There's something called an opening price and a closing price. Each candle opens at a certain price depending on what time frame that you're looking at. So let me say here, I'm looking at the 4-hour time frame, right? So this means that every 4 hour the candle opens and then it closes 4 hours later. So now what's going to determine the candle will be red or blue? So for the candle to be blue, the price has to open at a lower price, and then when it closes at a higher price. That is what will determine that the candle turns blue. Now for the candle to be red, the price opens at a higher price and then it closes 4 hours later. When it closes, it closed at a lower price. That makes the candle red. That's basically it. So you know, when you hover on a candle, at the top here you're going to see certain numbers and letters popping out. Now these numbers and letters have a meaning. The O stands for opening price. That's the price that this candle opened at. The H stands for high. This is the highest price that the candle went to, that this asset or currency went to at this 4-hour time frame. L stands for low. This is the lowest price that this currency went to in that period of time. And then the C stands for close. This is the price that it closed at once the 4-hour was up. Does that make sense? That is basically what it is. So when the price opens at a low and then it closes at a high, the candle will be blue. When the price opens at a high and then it closes at a low, the candle will be red. So now that you understand that, let's look at it a little bit closer. So let's look at the build-up of a candle. You can see here there's this little skinny thing stick at the top, and then there's some at the bottom. That is called a wick. We call that a wick, and basically this indicates, so the bottom part, it indicates the lowest price it went to, and then at the top, this indicates the highest price it went to. Now this candle here that you're looking at, when it went to that low price, it got rejected and went back up. And then when it went up to this, the highest price that it went to, it got rejected and went down. So the wick is showing you rejection. It signifies rejections. It means that buyers did not want the price to go lower than this, and the high here, it means that sellers did not want the price to go higher than this, so they rejected it and brought it down. And when the candle was about to close, they decided to close it over here, and that's why it creates this. So you'll be able to see this in the chart, because you have to be able to see what's the highest price it went to and what's the lowest price it went to. I hope that makes sense. So now that you understand how these candles are created, how can you use this knowledge to trade? Well, looking at the candlesticks alone is not going, just looking at one candlestick is not gonna really give you that much information about the price. You need to be able to read the past candlesticks, right? You don't want to just look at one candlesticks and think, okay, this candle closed at a red, that means the price is going down, so my prediction is that the next candlestick is going to be red also. You can't do that. You need to look at the past candlesticks, because the past candlesticks, they are creating patterns. They're creating patterns that tells you what direction that the market is going. The bigger time frame is usually the best to tell you the big picture of where the market is going. So as a trader, when you're beginning to trade, depending on what type of a trader you are, there's day trading, there's swing tradings. Day trading is you are trading for the day, means you enter the market today and you get out today. Swing trading is you're trading for a few days, few weeks. That is what it is. So when you are trading, you always want to start out by looking at the bigger time frame, which is the 1-day time frame, right? Because the 1-day time frame, it tells you the bigger picture of where the market really is going. When I'm looking at the 1-day time frame here, I can see that the price is still a little bit low, right? But when I look at the 4-hour time frame, or let's say the 1-hour time frame, The 1 hour time frame is telling me that, oh wow, we are going high, 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 it's going up. But if the one day time frame is not showing that, then I know that you can't just only rely on the 1 hour time frame. You want to look at the bigger picture. Always look at the bigger picture. There's so many patterns out there that traders use to help them to know what kind of positions to take when they're placing their trade. No. The one that I want to teach you guys today is Trendlines. You know, they say the trend is your friend. Whenever you're trading, you want to trade with the trend. So what is a trend? The trend is basically what direction the price is going. Okay, why? Because the market can only go one direction. It's either going up for a certain period of time, or it's either going down for a certain period of time. So when you trade, you want to trade with the trend. And how can you identify a trend? You can identify a trend by drawing trend lines. And in order to draw a trend line, you need to be able to tell what direction that the market is going, right? So, and when you're starting out to draw your trend line, you want to draw the trend line starting with the bigger time frame. So to identify, so there's two trends. There's downtrend, which means the price is going down, and then there's uptrends, which means that the price is going up. To identify a downtrend, you need to be able to see the price forming lower lows and lower highs. So let's look at this market, this chart here. You see here, this is the highest point price that it was at, right? And it went down to here, went back up a little. So now, since it didn't go higher than this price, it formed a lower high. After forming that lower high, it went back down even lower than the previous low. See, it went all the way down. It tried going up a little bit, but it didn't go higher than this one, right? It formed another lower high, and it went down. So looking at this, when I look at this, it's showing me that we are in a downtrend, right? And in order to confirm that we are in a downtrend, you need to see at least the price forming at least 2 or 3 lower highs. Then you'll be able to confirm that, okay, we are in a downtrend. So to draw a line on TradingView, if you go to the left side here, there's this tool right here that says Trendline Tools. You click on that, the first one, Trendline, click on that, and then you want to draw your line from the highest, draw it from the highest line it was at, price, or the highest price it was at, sorry. Oops, my charts just showed up. Okay, it looks like I can't really draw it here because I have my charting that I did earlier. I was trying to hide it so that the chart doesn't look so messy, but unfortunately I can't draw it. But I'm just going to show you guys. This is the drawing that I made in the past. So I drew this trend line here. I identified an uptrend here, and I drew the line. So I drew it from the when it started, it began the uptrend here all the way just up to the highest it reached, and then another line here. It's 2 lines, right? One at the bottom and then one at the top, and then you want that line to be touching the candles a little bit. And now you can even see when the price is moving, it's respecting that line. So you can see here it goes up. Once it hit that line is now, when it hit that line, it got rejected and it went back down. And then when it went back down to this line, it got rejected and went up. So when it's getting rejected there, it shows that it is a resistance. Whenever the price is trying to go up and it fails to go up, it shows that that certain price that it failed to go up to is a resistance. That price is a price that sellers do not want that price to go up to, so it gets rejected. And whenever a price goes down to a certain price and then it bounces up, whenever a price goes low to a certain price and then it bounces up from that price now is now called a support. Support means it's a price that buyers don't want the price of the crypto to go lower than that price, if that makes sense. So now, okay, to identify an uptrend, you need to see a series of higher highs and higher lows. That's how you identify an uptrend. So an example here, we can see here, just this area here, this is an uptrend, and you can tell that because the charts, like the candlesticks, are going, it went high and then it went low, it went higher than the previous high, and now it's lower than the previous low, which is here, and then it's just going up. It's forming, it's kind of like a stair, it's going up, right? And that's how you identify an uptrend. Whenever you see a higher high, lower low, then we are in an uptrend. And when you see a lower high and a lower low, we are in a downtrend. Okay, now knowing this, how can you use this knowledge to trade? I'm gonna show you this technique that I always use that helps me to make money every single day when I'm trading. So when you first begin your trading, you want to come to tradingview.com. You go to the cryptocurrency that you want to trade. You can look it up here on the top left. You search it up. For Bitcoin, it is BTC USDTP. Okay, and then it's always the first one. I use Binance, so depending on what exchange you're using, then you click on that one, because the price will be a bit different depending on the exchange. So you click on the exchange that you're using. For me, it's Binance, and this is the chart that I'm looking at. Okay, so now when I get here, I start out by looking at the 1-day time frame, okay, to determine what trend the market is at, what trend the market is going to. Okay, I'm like, okay, and then I look at the last candle, like the current candle here, which is this one here. It hasn't closed yet. On the right side, it shows that there's 7 hours left for this candle to close, and right now I can see that this candle is blue, or you can call it green. Yeah, it's blue, and that means that the candle is bullish right now. So when I see this, I'm like, okay, so on the daily candle, it looks like the price is bullish, and I try to see if there's any wick. Now remember, a wick is the price, it's either the lowest price the price went to, and then it got rejected, so it creates that skinny little thing there at the bottom, and then there's also sometime at the top as well, creates that skinny thing. So I try to see, okay, is there any wick? Because a wick would tell me, okay, let's say for example on this candle here, the price went up, it went up all the way here, and then there's a long wick, and now the price is like right here. Like say for this one, for example, this one here, I look at this one, this wick here, it tells me, okay, the price got badly rejected there, and this tells me that, okay, the candle should close at a red. It should close at a red. If, like, say the closing time is close, then that candle should close at a red. When I look at this daily candle, I try to see what is the price. Like, is it red? Is it a red candle? And I see if there's any wicks. If there's a big wick at the bottom, which shows that, okay, and then the candle is still blue, it tells me that the price tried to go this low, but then it got rejected, so it went back up. That tells me, okay, that means that this price is, the candle will close at a green, and I will look at that and see, okay, let me look at the 4-hour time frame now. What's happening? Let me look at, let me really dig deeper into it and see really what's happening. So I look at the 4-hour candle, and then here I can see that, okay, so we had one rejection here, you can see. However, it's very skinny. Okay, so I can see here we got one rejection. The price went up, but then it got rejected, and then this next one is trying to build up. So when I look, I go from 1-day time frame and then 4-hour, and then the last chart that I look at is the 1 hour. 1 hour time frame will help me to determine where is my best entry. You understand? It helps me to determine the best entry point. And to determine the best entry point, you need to look at something called support and resistance. Now, support is the price that, support is the area that the prices bounces back from and bounces back up from, and then resistance is the price, the resistance is the area that the price cannot seem to break above. That is called resistance. And so I try to identify the support and resistance before I place my trades. And this is why you really need to look really deep inside, because sometimes the lower time frames can show you a lot of support and resistance. However, sometimes those resistance and support is not really respected, and that's why you need to look at the bigger time frame to also identify what the support and resistance for the bigger time frame is. So if I go to the 1-day time frame here, I can see, okay, so I can see that this area right here, this area right here is a support. And how do I know that? Because when the price started going down, it stopped right here and it didn't go lower than that. So I can draw this line right here, and we can call that a support because the price did not go lower than this area. Also, when you're looking at a support and resistance, you want to look at it as a zone, because it's the price will not just go, it will not just go down to a certain price. It will vary, right? It might go down to, say, it will just go to a zone, if that makes sense. So I draw where is it? Rectangle there. Okay, so I draw it as a zone, and the way I determine a zone is I look at the price that the candle closed at. Oops. I looked at the price that the candle closed at, say the last low, the last red candle. So I hover onto this one, and at the top it tells me the information here. It closed at 38,203. So when I hover that on that, I draw this rectangle here. Yeah, draw that rectangle there, and then the wicks, I draw the line at the lowest wick. Okay, that's the zone. So this, I identify that as a support, and then resistance, same thing. Now resistance is the price that it fell to break above, and so when I'm looking at this chart here, I can see the price that this actually failed to break above is here. The wick here, you can see it's a big resistance because it really got rejected there. Okay, so on the bigger time frame, I can tell that this is a resistance and this is a support. Now, how can you use this to trade? So obviously this is the daily time frame, and it moves at a slower pace compared to the lower time frame. So if you wanted to trade this, when the price comes to the resistance and you know that, okay, that is a resistance, it means that the price will get rejected. You know, it's gonna get rejected, and you can place a short position here. So when you see that the candle has reached this area here, it's telling you, okay, you need to short because that is a resistance. You can short and then take your profit when it starts going, when it goes back down to the support. But sometimes it will not go back all the way down to the support. So that's why you don't want to just wait for it to go back all the way to the support. You want to take your profits a little bit above the support, just in case it doesn't go back all the way down here, because it may go down a little and then goes back to the resistance again, and then it breaks through and then it starts going high. So, but this is when you're day trading, you don't want to like go by the, you don't want to just rely on the daily time frame support and resistance. You want to place trades that are you in it for a short period of time and then you get out quickly, right? So looking at the 1 hour time frame here, you also want to determine their support and resistance, because 1 hour time frame also has its own support and resistance, and that tells you it's a support and resistance for a short period of time, right? So when I look at the 1 hour time frame, I try to see what area did the price go back to so many times, and it just keeps bouncing back from. So I can see that, I can see right here, this area here seems to be the support, because you can see here it touched it once and then it bounced back up. It came back here, touched it, it went back up, and then you can even see the third time it didn't even touch that area. It came low, but it didn't even touch it, and then it started going up. So that is definitely a big support. And then now resistance, let's see what area did the price kept going high to, up to, and then it just fails to break above. So I'll draw this line right here. Right here I can see this is the highest price that it kept going to but kept getting rejected. So I draw that line right here. Okay, so now these are my support and resistance. The top part is the resistance and then the bottom part is the support. So now I can see, now how would you use this knowledge here to trade? So basically you want to trade, you want to place a long position when the price hits the support. If the price starts going down, and you can even put an alarm, you can set an alarm, you don't even have to wait, look at the chart all day. I might make a video next time to show you how to do that. It's pretty simple. Okay, so how would you trade this? So basically you wait for the price. Whenever you see the price goes to the support, you will place your long. You go on Binance right here. This is the practice account. Binance has a test net where you can practice trading using fake money so that you can, you know, get that skill mastered, so that you can master that skill. So if I go here on TradingView, I did my technical analysis. By the way, this is called technical analysis. So I see here, okay, the price, I see it has hit my support, so I would go and place a long position. You can do that here on Binance, and you put the price. So depending on when you want to enter, you can enter through limit or market. If you want to enter right away, then you choose market. If you want to enter a certain price, then you put the price that you want to enter the market, right? So you go and put all the numbers here, the amount of Bitcoin that you want to use, you choose it, and then you place long. Now buy long is you're betting that the price is going up, and you can be sure about that. When you look at this technical analysis that you did here, you can see that the price has come to the support, and you want to place your long there, and you would get out when it starts going up, depending on how much profit you're looking to earn. But I recommend that you get out before it hits the resistance. So I would get out like maybe right here, because you can see when it went to this area, it bounced back up and it started going up, right? So I would get out like right here. And then if you want to short it, say if you want to enter again, you wait till it hits the resistance. When it touches the resistance, you can short it. You can short it confidently that it's gonna go back down, and then you wait. You get out right before the support. You don't want to ever get out exactly at the support. You want to get out at least a few points above the support, just to be safe. And you keep doing that until eventually the price has to either break upwards or break down. But you can use this technique to make money very, very quick. It's so amazing. Yeah, I think that's all I'm gonna be showing you guys today. I hope this video was very helpful for you. I hope you were able to take some knowledge out of it. If you find this video to be helpful, please give it a thumbs up. It helps the YouTube algorithm to push out the video so that more people can see it and learn about this. And if you want to keep learning more about trading, cryptocurrency, and all that sweet stuff, then make sure to hit the subscribe button so that you can tune in whenever I post the next video. Thank you so much for tuning in. I really appreciate it, and I look forward to seeing you in my next video. By the way, if you want to learn about technical analysis, make sure to check out this video. I go very deep into it. I even show you how to place a trade on Binance, so make sure you check it out right here. Alright, enjoy your day.